Right, interest rate decision is done. That's out the way. Bank of England held. We know why. We know what the reasons were and what's likely to happen next at December's interest rate decision. That's coming up. That's going to be parked for now. What's next? The budget. UK budget. Rachel Reeves going to come out at the end of this month and tell us what is in store for the budget. What I want to talk about is why the market doesn't really like that. And that speaks to one thing. Markets hate uncertainty. If there is any ambiguity about what's likely to happen in that budget, what impact that could have on the market, on the consumer, on the economy, how big the tax increases could be, how big certain spending cuts could be, how big, whatever it may be. Markets don't know yet what that looks like. We have an idea. The market has an idea. It's not great. That's why the pound isn't in favour. It's why the stock market isn't flying. There are a number of reasons to be apprehensive. So that's where the market focuses now. So it always has kind of like a tier one focus. What is the real-time priority for the market? Now, budget. Once the budget's done, it'll be inflation and interest rates again. It just goes on cycles. And actually, when you understand this and when you realize this, markets aren't actually that hard to anticipate and that hard to pick. Intraday they are, and everyone wants to be a speculator and everyone wants to make money from the markets, of course. But it comes back to the fact that markets aren't murky. They're not complicated. Financial services want you to think they are because they make a lot of money out of you when you're fearful and when you don't understand. There's nothing complicated about financial markets. Stock markets, bond markets, commodity markets, FX markets, they are not complicated. Follow me and I'll explain why.